Good evening, TheoTRADE. This is Corey Rosenblum, and you're watching the Theo nightly video for a very active intraday reversal for the 20th here in December of 2023. Let's get started. If you look at this chart and you see that chart, this is the S&P futures on a daily chart. This is just an hourly chart. You might not see the big reversal that took place today, but if you scroll just a little bit, you see it. It jumps off the chart. That is our intraday reversal. It's a blip on the big picture, and we are grossly overdue for a pullback. Again, a pullback is just looking for the market to trade a little bit lower down from the highs. We've had relentless upside action, which we'll talk about in a moment. Not dissimilar to over here in June and July, but that ended poorly with the market coming off to the lows. But we'll start with that. What caused this selling? And if you see it on an intraday chart, you'll make a little bit more sense of it. There's the S&P futures 4830, ended the session about under 4750. Nasdaq had a strong reversal. That's your weekly expected move. That's the top of the volume profile. They go together. Of course, your expected move in the S&P got hit in today's session. And we have the reversal back to the mid. I think the key thing for today's session was the Russell, which had its intraday expected move at 20 and 64. Was actually a good trade setup. 20.64 on the Russell. That's the expected move, and that's the peak of the market. But what caused this? And as we go through the aftermath of the reversal, what does this leave us in the intraday and the intermarket? That includes the bonds, which made new highs. And maybe if there's time, we'll talk about FedEx and USB, Tesla, AMD, some of the others that came off in the biggest percent losing or decline in today's session. FedEx off 12%. What caused this selling? Just a few things. You never know exactly what causes selling, but mainly it's going to be Fed Harker. That's one of the things we talked about in the afternoon session, and some of the things as well, which is, look at the spider, but let's just take a quick note about what Fed Harker, who is Fed Harker? He's one of the governing bodies or governing members of the Federal Reserve Board. And what did he say today in a press conference, or at least an interview or a discussion? We'll take it just a little bit. These are headlines from our SPY News, Live News tab here in thinkorswim. Fed Harker says just a few things that put the market in a downspin or a downturn tailspin. The soft landing process will be bumpy. I expect unemployment to tick up, but not by a lot. And we don't need to raise, the Federal Reserve, we don't need to raise rates anymore. But this is a little concerning. I am hearing things are starting to soften faster than the data suggests. So are there things happening behind the scenes that might be a little bit more bearish than we are led to believe, perhaps? Let's keep going. The Fed's Harker says things are looking better for the inflation outlook, which is good, right? But the job on controlling inflation is not done. So you think, yay, and then, oh no, the job on controlling inflation is not done. That means rates could go higher or at least stay longer or higher longer than expected. Remember, the market's pricing in a rate cut, and that's as early as March. If Fed Harker and some of the other Fed members come out, and we call it Fed speak, but if the Fed board speaks that maybe interest rates might not be cut in March, that's going to be a bearish sign for equities, especially as they've ran up so much, so rapidly in the last few, I'd say weeks, but especially days. But we're still not done yet with Fed Harker. He said the economy is incredibly resilient. Notice what I'm not laughing at this, but you almost have to laugh at this with how he's saying there's good news and there's bad news. There's good news and there's bad news. The good news is the economy is incredibly resilient. That's good news. That's good news. But the reasons for some people's bad economic vibes are real. I'm not sure what he's talking about there, but there are some reasons to be bearish of the stock market and the economy, absolutely. But this is the bad news, at least in terms of the market. The Fed won't cut rates right away. I think it does come down to the Fed funds rate and what the Treasury or what the Treasury yields are looking like, as well with the bond market. Let's actually start here, talk about the yield. And as the market has rallied, the Treasury yield, this is our 10-year Treasury note yield, hit that 5% level. 5%, that means 5%, and is traded all the way back under 4%. let's take this into a bigger perspective, because that is in part why the equity market rallied, because they are pricing in or anticipating or expecting or looking forward to, or maybe hope among hope, that the Federal Reserve cuts rates in March. So the market moved ahead of that announcement, or at least the sentiment that the Fed is shifting to be a little bit more, we call it dovish. Dovish just means not as aggressive or tightening with monetary policy. The other would be hawkish. Hawkish means raising rates and pulling the economy into a recession with higher rates to combat inflation. 5% down to 4% in the Treasury yield, and that has corresponded with what we show here in TheoTRADE as the Fed funds rate, our future forecast. So what we're looking at is the probabilities of a rate cut or rates staying the same. That's how I'll interpret it. The probability that the rates stay the same, 5.25%, Fed funds rate, overnight Fed funds rate, is 85%. That means it'll just about be guaranteed to stay unchanged. No rate hike, but probably not a rate cut, unless things really, really, really fall off the cliff in the economic front and jobless unemployment rate goes up, consumer sentiment collapses. If all those things collapse, sure, we'll have a rate cut in January, but really, really low probability of that happening, because the focus of the market, traders and us and TheoTRADE, is on March. March! It's going to be March 20th, 2024. And what we're looking at, how we interpret these data, current Fed funds rate, 5.25%. Got to put that period in there, 5.25%. And the chance of it staying at 5.25, 12% chance of it going down, that's a rate cut. That's what the market wants, is 75%. These numbers will be key going forward. And of course, the economic data on inflation, on the economy, GDP, unemployment rate, and all those data will go into those forecasts. Speaking of those forecasts, let's take a peek at what's coming up after this volatile session. We had existing home sales, we had Micron, we had General Mills, all the other companies, FedEx, Accenture, those took place. FedEx actually one of the biggest losers or decliners in today's session, down about 13%. Philly Fed is going to come out Thursday. Nike, Carnival Cruise Line, and CarMax are going to come out on Thursday. Friday, as if this wasn't enough, and it is a holiday, shaping up to be a holiday week in terms of the end of year holidays, we'll have the core PCEPI. That's your inflation data. And if that's not enough, we'll have Michigan consumer sentiment and U.S. durable goods. That's what's on the docket outside of the market trading to the downside. Now, of course, there could be other reasons with respect to some of the other places. Geopolitics could be that. Taiwan, China, and nuclear attack. Right? North Korea says recent IBM launch shows the strategy is not to. So we can't really ascertain exact reasons why markets move, but it does. A lot of the headlines do come down to what the market is pricing in about the Federal Reserve and when or if they're going to cut rates. So the hype of rate cuts has sent the market up to new highs. A lot of stocks have joined the market at new highs. Google, Amazon, Meta, JP Morgan, MasterCard, Netflix, Intuit, and Boeing, Caterpillar, GE, Lulu, Chipotle. Those actually made and continue to extend their 52-week highs, but we won't talk about those because the bigger picture is afoot. Crude, looking at crude coming up off a support level bounce buy opportunity, and that's just kicking it back to the middle of the trading range. Crude actually has a buy position that's taking it back to the middle of a trading range. Gold is at the top of a long-term, multi-year sideways trading range. And whenever it gets above this 2,000 per ounce level, 2,040, 2,050, it does spike into it and rally quickly into these upper prices, but then historically, at least the last few years, has came down, traded lower from these price points. And that's where we are in the end of 2023. Of course, we talked about the bond market, which is having a rally on the back of a hopes, and this is decent volume coming into the bond market. TLT at least, there's ZN, and of course ZB is your 10-year, ZB is your 30-year bond. And these are getting rallies, maybe not dissimilar to what we saw at the end of October, where we had similar type of, will the Fed stop cutting or stop raising rates? Did it for a little bit, but then rates went up a couple more times. Bond market went down. So again, FedEx, one of the weakest stocks in today's session, the weakest stock in the S&P 100, did come off of its, hard to see because we're looking at a very lengthy period, but it came off of its resistance at the top of a trading range near 280 or 285. There is where FedEx trades after earnings. We'll be watching this closely, as that has a potential to talk about or give us insights again about the economy. And that's what Fed President or Fed Board member Harker was talking about when he said this headline that here, I am hearing things are starting to soften faster than the data suggest. As always, be careful and safe. Volatility is roaring back. The VIX, although it made new lows, is coming back strong, at least in today's session, with a sell-off. And that 1% decline, all sectors red, doesn't take into account how far the market fell, because the market was up in today's session and then reversed toward the afternoon. As always, be careful, safe. This is Corey Rosenblum with tonight's Theo video update for December 20th, 2023.